Deferred expenses, also known as prepaid expenses, refer to items paid in advance before receiving the benefits of the cash disbursement. Here's a question for you. Is prepaid expense an expense account? A prepaid expense is not an expense account, but rather it is recorded as an asset account. When assets are used, consumed, or become expired, they become expenses. A simple example is assume yourself as a student renting an apartment. Aside from paying the current month's rent, you decided to pay 2 months worth of rent in advance. The 2 months payment is your deferred or prepaid expense. Some examples of prepaid expenses are rent, insurance, and other transactions and events that are paid in advance and are used over a period of time. Deferred expenses are initially recorded as a debit to prepaid expense to record the asset received and credit cash to record the payment. When adjusting prepaid expenses, debit to expense to recognize the use, consumption, or expiration of the asset, and credit the prepaid expense to recognize used asset. Let's compare the initial entry to the adjusting entry. The prepaid expenses, or unexpected cost and cash, are both part of the asset. The prepaid expense that was initially debited was credited on the adjusting entry to recognize the asset that has been incurred. To illustrate the accounting for prepaid expenses, let's first look at prepaid insurance as an example. ABC availed an insurance plan to cover 6 months starting November 1, 20X1, worth $2,400. The bookkeeper initially recorded the transaction on November 1 as a debit to prepaid insurance, which is an asset account, and a credit to cash, also an asset account, for the total amount of $2,400. We determined that the current account balance of ABC's prepaid insurance account is $2,400. On December 31, 20X1, the balance of ABC's prepaid insurance should be adjusted on this date since this is the end of its current accounting period. Thus, to adjust the balance, ABC must reduce the amount of prepaid insurance and increase the expense account. From November 1 to December 31, 20X1, 2 months have passed since the insurance plan was availed. This also means 2 months have been used by ABC, and these 2 months shall be recorded as an expense. $2,400 prepaid insurance multiplied by 2 months incurred over the 6-month insurance period equals $800. This amount would be recorded as an expense for the year ending December 31, 20X1. To record the adjusting entry, debit the insurance expense account and credit prepaid expense for $800. Remember that expense accounts have a normal balance of debit. That is why we debited the expense account, since an expense was actually incurred due to the passage of time. The prepaid expense account was credited to recognize the expired portion. After the adjustment, the balance of the prepaid insurance will be $1,600, and the expenses will increase by $800. Before the adjustment, the prepaid insurance account balance was $2,400, so ABC initially reported that amount. After the adjustment, the prepaid insurance will be reduced to $1,600 because of the adjustment as of December 31, 20X1. This means ABC's reports should include the adjusted balance of the prepaid insurance, equivalent to the remaining 4 months, and the insurance expense worth 2 months. ABC initially purchased $235 worth of supplies on December 1, 20x1, and some of the supplies were used during the month. ABC's physical count of its supplies at the end of the month revealed that supplies worth $125 remain unused. The initial entry recorded by ABS is debit to supplies to record the asset and credit cash record the payment made worth $235. The supplies or prepaid supplies account is an asset account, while the supplies expense account is an expense account. On December 31, 20x1, the account balance of the supplies account should be $125, since this is what remains based on the physical count. The difference of $110 should be recorded as an expense for the month of December. The adjusting entry to record the expense is as follows: debit supplies expense and credit supplies of $110. The supplies expense was debited to record the supplies consumed during the month, and the supplies account was credited to reduce the unused supplies on record. Looking at the table, you will be able to understand more how the adjusting entry works. Before adjustment, the supplies account balance amounted to $235. The supplies account balance based on the physical count should be $125. So the adjustment of $110 will reduce the initial balance. Supplies expense is recorded to recognize the supplies used or consumed during the period. Other prepaid expenses like prepaid rent are accounted for similarly to the accounting for prepaid insurance and supplies. Some prepaid expenses are not recorded as assets, but are recorded as an expense immediately, and this will be discussed in the upcoming chapter.